So what is momentum investing? Momentum investing typically involves a 6 to 12 month measurement period to find the best performers. And in this case, we're looking at exchange traded funds, ETFs. It then anticipates a further 3 to 6 months of strong price performance with the possibility of outliers that can carry on for much longer time periods. In its simplest format, momentum investment would choose between stocks and bonds or between US equities and emerging market equities. However, in recent times, the correlation between these assets has changed such that they can be under pressure at the same time, and therefore this sort of momentum system wouldn't work because you'd just be choosing between two asset classes that were both going down. So some definitions I'm going to use. Momentum is price change. Relative strength is how an investment performs in relation to another group of investments. Trend is consistency over time. Mean reversion is that an investment can experience short-term strength but later revert back to its longer-term growth rate, and it might have negative growth as it reverts back. And then the sharpe ratio is the return per unit of risk, where risk is measured as volatility. So it's looking at low volatile stuff that's going up. So some pitfalls of momentum investing. Firstly, it can involve selecting between assets that are highly correlated. You would not sell BP and buy Shell, but you might sell BP and buy International Airlines Group if you thought oil prices might fall. Secondly, selecting between too many assets. There are over 40 individual country ETFs. If you select between all of them, you'll be forever chopping and changing as they jostle for the top position. Instead, pre-screen for the best ones, and within that subset, avoid high correlation, such as Saudi Arabia and United Arab Emirates. Third problem is selecting the riskiest assets. Lower risk assets generally don't feature in momentum systems. However, innovation ETFs can be stuffed full of loss-making smaller cap stocks, and they should be avoided. They will show short-term momentum from time to time, but we can still make good money buying ETFs with a solid risk to reward ratio or sharpe ratio and a stable price growth trend. Finally, selecting assets that have already gone up a lot and are overpriced. When starting a momentum system, it can take a while to build the initial portfolio as you have to wait for new signals. So rather than buying an energy sector ETF that's possibly at the end of its price move, you might want to buy something that's just recently broken out. Don't buy ETFs that are a long way above a medium term, such as 50-day moving average. And again, that could experience mean reversion. So some momentum systems in action. So here are the results of a typical momentum strategy that has underperformed the S&P 500. The model here says sell Qatar, which has gone down over 4%, at a loss, and buy Turkey. But most people know very little about Qatar, so they're unlikely to want to hold on to the losing position until it came good. But ultimately, you can say the same thing about Turkey or Peru, which was a previous recommendation. So it flits from asset to asset on a slow grind down and down in value. It just keeps crystallizing losses. Average gain here, minus 6.87%. What if instead you only selected ETFs that you had some confidence in, some knowledge of, and you'd pre-screened these ETFs for a decent sharpe ratio? Funds versus individual companies. So a fund can do stupid things, and many times you'd be right to sell on the first bit of bad news, as it's normally followed by more of the same. But this isn't the case with non-thematic ETFs. They can have several duds, but this will be more than made up for by other companies in the fund. A healthcare ETF will produce decent long-term results, backed by a trend of an aging population, so there isn't much point in selling it. So this is the strategy. I use my dashboard file, and I'll put a link to that in the description. I'll use that to find the best ETFs by country, sector, theme, and factor. The file is free to download, and I'm going to use a 6-month time frame to measure momentum. I use my relative strength file, again free to download. I'll put a link in the description. This will discover how ETFs rank amongst a universe of over 1,000 contemporaries. All I need to do is find the US equivalent of the UK ETF from my dashboard file. I'll also pull risk, reward and correlation data from another file that I've created, so that will help me in terms of the low correlation and good Sharpe ratios. And within these groups of ETFs, I can now rank on absolute and relative momentum. The rankings will be very similar, but the advantage here is that an ETF that's showing short-term price decline, but its relative strength is holding up, I'll now know that that price decline is more due to the market rather than the specific ETF having certain issues with it, and I can stay in the trade for much longer. I'm going to filter out ETFs with a strong 1-month price growth, mean reversion, or strong 12-month growth where the trend might possibly be about to end. So if I look at, first of all, at the correlations, so here this table shows how all the different ETFs are correlated. Got the average correlation here, so something like commodities isn't that highly correlated with equities as you would expect. I've got the volatility here and I've got returns here, so I've got my Sharpe ratio here, so I can again find the best Sharpe ratios. Also I can look at returns over maximum drawdown, which is a bit more meaningful for me because it's more putting emphasis on the downside risk, and here something like healthcare is showing up quite strongly. So that's the first thing I look at. Then this is the actual system itself. So I've got groups of countries or regions, factors, sectors, themes, and asset classes. So I pull price growth over different time frames, pull in the relative strength that comes from the relative strength file here, and then I've got this the manual decode that I've done here. So I can rank on the 6-month price growth, rank on relative strength. I've got a screener on volatility. If it's too high, it's coming through as red. I pull a spark line, look at where it is relative to a 52-week high. I can pull prior data. I just copy what's currently going on, look at it relative to a moving average to see if it's overextended. So now what's in green is potentially things to consider. So it looks at how high the relative strength is, whether it's over about 80, which is good, and then these ones that are in green are the highest ranked on the 6-month momentum. So I put all this together, and now I've got my system, and I'm going to start to look at it once a month, do some dummy trades, see what it does, see if I need to refine it, and yeah, just see if we can really get this to work. So if you're interested in this, hit the subscribe button and you'll get notified every time I upload a video. And if you're interested in these 2 files, then I'll post a link in the description as to how you can get hold of them.